New information tonight from the Federal Reserve, which has decided to hold interest rates steady for the first time since July of 2025.
After lowering rates 3 times last year, the Fed pressed pause, keeping the key rate at 3.6%. The Fed says that this approach to monetary policy is the most efficient to maintain economic health. Now, 2 officials dissented from the decision to hold rates steady, opting for a quarter-point reduction instead.
And joining us this evening to explain how today's announcement could impact your finances is David Miller, Wealth Management Advisor with Northwestern Mutual San Diego. Good evening, and thank you for joining us here at Fox 5.
Thanks for having me here.
I guess the bottom line for me is, for viewers at home, like, how is that going to impact our monthly budgets?
When the Federal Reserve lowers interest rates or even keeps them where they are now, it's going to help parts of your money and then hurt other parts of your money. So it's going to help people that are borrowing money. So if you have a mortgage, you haven't looked at the interest rate in a couple months or a couple years, you might be able to refinance it and lower it. If you're a saver and you've got money in a savings account, the average is about 0.61% interest is what those are paying. Good time to move that out where it's going to work harder for you, like a high yield money market, something like that.
When it comes to refinancing, where are rates now relative to the number that they threw at? They threw at 3.6%. So what does that mean for an actual rate?
The federal funds rate doesn't relate directly to mortgage rates. Those are tied more to the 10-year treasury, which the Fed doesn't have direct influence over, but they tend to kind of go in the same direction over time. So mortgage rates are probably about a point lower than where they were at their peak like 2 or 3 years.
So if you got it at the worst time, now's the time to maybe
like I did. I bought a home about 2 years ago. Might be a good time for me.
Might be a good time for you. So what does this mean for credit card holders and credit card rates?
Credit cards interest rates are at their historic highest point, almost they've been ever. They're not dropping as much as we'd want them to. It's a great time to attack the highest interest rate credit cards that you have right now.
Yeah, we have some over $1 trillion, right, in credit card debt in my household. I mean, in the country as a whole. So President Trump had proposed the idea of making it 10%, capping credit card interest rate at 10%. A lot of people said that's a terrible idea. What is it?
This is going to be he's thrown out a lot of different ideas as far as helping people buy first-time homes, to unlock the housing market, credit card interest rates. That could have a lot of unforeseen impacts. It might, unfortunately, take away some lending to different parts of the economy. It's hard to know with the president what's going to happen and what might be negotiating tactics. So we'll keep an eye on that, but we'll just have to wait and see, I think, on that one.
So how is this going to impact people who are looking to buy a home?
If you're looking to buy a home right now, this could be a pretty good time. Make sure that you've got your finances in order, have a budget. It's a great time of year at the beginning of the year. Go back to the basics of your financial plan. Create a financial plan, write down your goals, make sure that you have a budget for things like paying down debt, buying a home, everything that you want to do this year.
Dave, let's talk about the Fed not moving things today, but in a couple months, we're going to probably see a big change because Jerome Powell's time is going to be up. What could happen there? What is, like, in the financial world, the anticipation of what might happen after May?
It's really hard to forecast the future. I think Yogi Berra said the hard thing about forecasting, he said something funny, I'm going to mess it up right now, but the hard part is if there's uncertainty about the new Fed chairman, that could actually create a bad thing for interest rates, and it could make things like mortgage rates go up after May when the new one's installed. So right now, if you could save a meaningful amount of money, $500 to $1,000 a month on your mortgage payment, it's a good time to think about it.
Is there an anticipation, though, that President Trump will replace him with somebody who's in his pocket effectively?
That's what President Trump has been saying. Yeah. It seems like that's most likely.
But I think a lot of people obviously don't realize that if you drop the interest rate and the conditions are not actually there, that's going to create some problems for us.
It may create some problems. If interest rates drop, it usually means that's because the Federal Reserve thinks there's a problem with the economy. Right now, the economy is growing pretty nicely, so there could be unforeseen impacts that we might have to pay the bill for in the future if that happens.
What advice would you give anybody out there? You talked a little bit about refinancing, a little bit about getting money out of savings accounts. What would you do with, let's say you come into a little bit of money or you pay off some credit cards? What would be some good financial advice for people as a result of what's going on with rates?
Yeah, what I would go back to is there's this old African proverb that says, if you want to go fast, go alone. If you want to go far, go together.
Yogi Berra didn't say that one?
What's that?
Yogi Berra didn't say that one?
I don't know. Maybe. Yeah, that sounds like it. Call a financial planner. Call my team. Call somebody. Create a financial plan. Have a partner. go farther with your finances in 2026.
Never too late.
That's right.
David, thank you very much. We appreciate it.
You bet.
More changes potentially on the way.
That's right.
All right, we'll be right back here on the Fox 5 News at 7 o'clock.